Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over just the kind of sideways action on the Bitcoin chart, which has allowed some altcoins to pump and others just freely dumping as the people take profit. Let's go ahead and take a look at stocks here. You can see basically the same thing, just kind of sideways action there. And, if we do look over at price action, I do have the new alpha momentum scales over here for you, so you can take a look at what I'm thinking in terms of our relative bullishness. We did start the day today. This is the 1 hour chart, but we did start the day today on the bullish side, so that is quite good. I did notice that we had a little bit of an accumulation wedge going here, and so that thing did just pop off right before I started to make this video, but I was, intending to look out for that one. The measured move of it does seem to have played out, so we'll see where that goes. But it is nice that we are over that estimated neutral area, and we are in the bullish leaning momentum area. Not solidly bullish, but leaning area. If we go ahead and take a look at some of the structure that we have on the chart. First of all, you can see that we did fill in the CME gap pretty squarely, and we've actually used it as support twice now. So that's quite interesting. Bitcoin is respecting that area, which is it's just something to watch out for. Sometimes those CME gaps, they do offer some type of psychological support somehow. And if we do put on these structures that we've been following on the Bitcoin chart, of course, we do have one of these original structures from our first V-shaped bounce in this area from 15,000 to 18,000, which does suggest that we could eventually perhaps retrace this area all the way back to 18,000, and that could just be a bullish fake out. Basically, anything up to 18,000, I'm not 100% convinced that we are just going bullishly into the market. Of course, that would be a very bullish move, but when we're talking about the macro timeframes, right now, my new momentum measurements for the day are suggesting that we do have to be above 18,333. That has been consistently coming down over time. I do kind of play around with these upper numbers just a little bit based upon some other factors, just kind of that secret sauce. But the solid bullish here is still going to be relatively around $17,000, kind of taking out this area over here, and we're just not there yet. We have had quite a bit of a bullishness on the chart, as we see that we did come off of this indecision wedge after working our way down this broadening descending wedge here. We did have a nice pop up. We didn't hit the target, so that's why I consider this target to be still valid and that we may still reach that area. We did put in an indecision wedge and ended up breaking down. We broke down into another broadening descending wedge. Now, the measured move for this indecision triangle here was right around 15,700. And so when we started to put, a couple hourly candles in this area and just started to wick down, but, we would quickly like wick up, I did suggest that there looked like there was a bit of a fake out going on. And that fake out was essentially a head and shoulders. You can't see it because it's so tiny, but I did suggest that we could have a measured move all the way up to that CME gap, which then I was saying that there was a high likelihood that we could fill it in. And in fact, that's what happened. Now, we did fake out to the downside right after, kind of forging this, this kind of head and shoulders kind of pattern on the micro time frames. But overall, we did maintain that pattern's measured move, and then we ended up putting in some type of a bull flag. So, guys, I mean, we just really have been killing it over here at the Alpha Commission. Of course, you do have to take some things with a grain of salt when you have a projected move to the upside, and then you start moving to the downside. But that's just how price action works. It's up and down. So you gotta also not throw away your thesis. If you didn't violate that low, then all you have is a higher low. So technically you're on your way up, right? You could still play out that measured move. And so we didn't give it up, we didn't violate that low, and so this measured move did in fact play out, and that led to another inverted head and shoulders, which in fact had a measured move all the way up to that 17,000 area. This one hasn't been met yet either, so I do consider this pattern to still be active as well. So now we have two patterns that I consider to be still active. They haven't been invalidated yet. One is to 17,000 and the other is to 18,000. And so I do reserve the right to just to have bullishness in this area, depending on how our price action goes. And we haven't violated that CME gap, having actually double bottomed off of it. This does look fairly okay for the time being. This pattern isn't always the most bullish. You can see it is a bit of a diamond pattern. It is a bit of just a kind of indecisive pattern on its own. And so this thing, just like this over here, you can see it almost has the exact same structure actually. This thing could break down or it could break up, and we just don't know yet. So we're just waiting to see what's going to happen. Now, if we do look to see what we might have in store for us, well, we did have a bit of a rising wedge going on here. And so this rising wedge did have a measured move down to 16,000. Now, I did suggest that the CME gap could offer support to avoid the major move on that one. And so far, we have avoided coming down here. But just like this pattern over here, I mean, look, this is really just like a micro version of this one. So just like this one broke down and grabbed this liquidity over here, this pattern could break down, just kind of wick down there, grab that liquidity. You see we have some naked candles down here. We have a little bit of a naked candle down here. We could grab some of this liquidity on the downside and maybe just flash wick back up, right? So as long as we don't hang out there for too long, nothing will be broken. I don't think anything on this chart is going to get broken so long as we don't put, a couple 4-hour candles underneath $16,000. We will be a little bit in danger down there, and breaking above this level isn't going to be the easiest thing in the world. But I just think that as long as we just kind of flash wick down here, grab some liquidity, that could be a fake out, sort of like this move right here, right? But just on a smaller thing. I mean, this pattern right here could just be playing out again, and then we just work our way back up to those other levels that we just had kind of abandoned for a while. And let's go ahead and just see. Oops. Let's go ahead and just check out that macro structure that we do have going on, because we still are waiting on at least 3 structures there. And then we do have this macro structure, which itself, it used to be an indecision kind of wedge here, but overall it was still a bearish pennant. And this one does have measured moves all the way down to 10,000 to 11,000 or 13,000 to 14,000, depending on if you're looking at the height of the this distribution wedge, or whether you're looking at the flagpole of the bear pennant. Now, one interesting thing about this is that we haven't broken down, right? We haven't broken down, so this isn't really a valid consideration for me at the moment until we break back down into this bear pennant, or until we kind of skirt around it and then get below this kind of I don't know what to call it. It's a neckline of sorts down here, and then we can talk about these bearish moves. But as for the time being, in that we did break above the bear pennant, and that we do have measured moves that are bullish to the upside, at least 2 bullish to the upside and only 1 bearish. And by the way, I'm just looking at this now, but that bearish measured move, it would only take us to this diagonal on that bear pennant. So let's go ahead and just pull this out. Yeah, you see this measured move right here. If we were to fall down to this measured move, Look, that would just take us to the diagonal of this bear pennant where we could easily just bounce back up, right? It's kind of like you just retested the breakout and you could pop, all the way back up to this thing. And so, a few episodes ago, I was suggesting that there's the possibility that we could do something like this, right? Where they just liquidate the shorts, then they liquidate the longs, and then the market makers have a ton of liquidity that they've captured from both the shorts and the longs in the market, and then they could use that liquidity to just drive us lower, into this maybe 14,000 to kind of $11,000 area. And we can talk about those level by level should we work our way in that direction. But right now, we're pretty much on course for this, guys. I mean, it's been just a meandering path, but I don't know how long ago, maybe a week ago, I was talking about that, and we're just literally on the path that I kind of marked out. And so this does suggest to me that my idea was consistent with a market maker behavior. And if you need a little bit of evidence of that, if you want just to see what that kind of looks like, yeah, here's a perfect example, right? Just market makers driving this down, popping it back up, and then they get the liquidity down here from the shorts that got liquidated, and then they get the liquidity up here from the longs that are liquidated, and then they have plenty of capital, plenty of liquidity to just drive the market, just further down there. And overall, you can see that. This bear flag down here still did work out. So here's the flagpole, and the measured move brought us all the way down here. So that's why I'm saying, guys, that we're still not out of the woods in terms of the macro. In order to invalidate that bear pennant to the downside, what we would have to do is we'd really have to, get above this $18,000 area. If we can get up here, I'm going to consider that this was probably all just a bottom wick on the very higher time frames, and maybe it's just all because of all of the negative news that's been in this industry. So if we could just go back on course, then no harm, no foul, and maybe this was the bottoming structure that we're going to be building. But so long as we're underneath this $18,000 level, and in reality, 20,000 is a good number to just kind of be pegging your hopes around, to be honest. But just on a momentum basis, around 18,300, and then just kind of on a structural basis, if you're over 20,000, it's looking much better than if you're underneath 20,000, because anything in this kind of gray area here could easily just bring us all the way down, okay? Because again, guys, like we have a bear pennant, okay? And that bear pennant has measured moves to the downside. So this is the flagpole right here, right? And that's, how these things break down. All right. So you guys understand my philosophy of this area and why I can be both bullish, why I can say that I got the local bottom here, why we grabbed the local bottom down here, and then also at the same time be bearish and suggest that we're still having our eye on the prize on potentially one more capitulation lower, and then I think the macro is going to be pretty satisfied with that unless something really extreme happens in the traditional markets. You know what I mean? So I don't know if there's any contagion left to be spilled out because of Genesis or FTX or Binance or Tether or whatever. I don't know. I can't predict that stuff, okay? Like some of these things, we've just been having black swan after black swan event, and if people say you can't go lower, guys, we can go all the way as low as, I mean, I would estimate around like 5,000 to 10,000 is pretty much our lowest kind of region that we could really hang out at. I really think above 6,000, probably above 7,000, but you never know. There could be some weird flash wick, some really crazy thing that happens in the traditional markets. And I'm just telling you that there is a pathway down there. Don't laugh at it. Don't mock people for it, because we have to be psychologically prepared for it. However, however, based upon the facts that exist right now on the chart, I do not think that I have any reason to believe that we're going underneath $10,000. Maybe a little wick down here to that $7,000 to $10,000. That could be something like if something pushes us over the edge, some contagion to Genesis or some of these other institutions in crypto that could be affected by FTX. There are just a couple things that are still up in the air that could be one more leg down. But you know, that aside, I'm getting pretty interested in this market, okay? Like in terms of this area. And I don't think that we have to be buying to DCA for the long term. I think all of this is just kind of good trade planning. Really, I would like to see those long-term EMAs, those weekly EMAs, really putting in those kind of accumulation pattern before I would consider in this just really crazy world that we have right now to just go all in, that kind of stuff. I just don't feel comfortable in the the macroeconomics right now to do that. But on the other hand, things are looking good. Okay, things are starting to look pretty bottomy in the world of crypto. So the lower we get on this chart, it starts to make sense to take more and more risk the lower that you go. You don't want to be taking risk up here because you're going to be crashing down, right? You want to be taking risk in these areas. And so I don't feel shy about these moves anymore. Okay? Like I felt very shy in this area. I felt terrified to take any moves in this area. I was still warning people against this area and this area, but now that we're getting to this area, and especially if we drop to this kind of like yellow lines down here, my fears are going to be pretty much gone, you know. And what's left, what's really left is just this kind of diagonal. This would pretty much be the only thing left. And so yeah, I mean, I could see us wicking down to 7,000 if something crazy happens, but any of these levels could just catch us as well. If something crazy doesn't happen, then we're just really getting ready to be caught and maybe just go sideways and accumulate for a while, right? So guys, it's just really hard to make that judgment down here, and it was really hard to judge where's the top up here, right? You could have been right here, but yet we still made a higher high, right? After like a couple months, we made a higher high. So what could happen is that we could be at a local bottom and then months go by and then we have just like we had a dip here and then we pop back up. We could pop up and then months could go by and we could drop down to this diagonal. You see what I mean? And we could make some type of a double bottom or even go lower than this low that we're at, or if we drop a little bit further, we could even go lower than that one later on. There's no rules against that. Okay, you can see something very similar here, right? Popped up and then dropped down here. Well, we're on the other side of a double top, so this was a higher low, but we could actually end up putting in a lower low because, again, this is a double top. And, you know, funny things happen when you're on the other side of a double top and you're in a macro economic downtrend for almost every market in the world. Funny things can happen. So just stay open minded that there could be significantly more downside. But at the same time, uh, don't terrorize yourself about it such that you get scared out of the market. No, 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 no. The time to get scared out of the market was when we had a double top, right? When we made an all-time high twice. That's pretty scary. You're like, oh, okay, we're approaching these like numbers that we kind of, collapsed from. And is that just funny money? Is that just money being printed? Or is that what the real economy can support? Now, we know the real economy can support this number because that's what people bought in a panic, right? We know that it can support this number because that's what people bought in a panic. And we know that, just years and years accumulated to this area. So anything here, in this region along this trend line down here is actually probably pretty fair game, right? And I know it's not that easy to understand, like the encouragement if let's just say that we're, like 20,000, right? And we could drop down to 10,000. You could drop 50%. That's a huge amount to lose. And so everyone wants to grab the bottom. But the thing is, sometimes these things, you see, like this bottom right here, right? Like this little area right here, sometimes these things just turn around on you. Okay? So we may not actually be at the bottom. But we could still have a turnaround at any time. And so if you find that we're getting that bullishness on the charts, you shouldn't be too afraid to deploy, even if you've been afraid for the last year. Okay. Again, and this is not financial advice. I'm just trying to create theory, and I'm trying to improve myself as a trader. And if my friends and the family can come along with me on that, then great. If you're just a random viewer, please do your own due diligence for all of these things. But I'm not feeling that afraid. Okay. I felt very afraid up here, right? I'm very afraid up here that I could lose everything if I make a stupid move, but I don't feel that afraid down here. Okay. Just wanted to put that out there. And guys, let's go ahead and zoom back in just so that we can kind of move on from that topic, because we also have to take a look at our good old momentum pools, and the momentum pools are pretty interesting today. We did start the day quite bullish. Now, it's been kind of rare for us to start the day bullish. You can see we've been starting the day under our momentum pools over here a bit too often, right? Kind of led to this downturn, and you know we we didn't even start this day on top of the momentum pool. In fact, we haven't started on top of the momentum pool for quite a long time. However, today we did, and so that's why we're on top of the momentum pool even before I made this episode, which is generally speaking a good sign. You see, you start the day under it, right? You under the momentum pool, there's a good chance you can break down. You start the day above the momentum pool, and there's a good chance that this could continue on. Now, if we do break down and re-enter the momentum pool, that is going to be under 16,510. So at least on the 24/7 exchanges, you're going to want to watch out for 16,510 in terms of a point that we might break down into our momentum pools. And then, I consider the neutral point to be around 16,465. So below that number, I'm going to start leaning bearish. And I think we're going to lose some momentum around 16,355, basically the top of that CME gap. Okay, that's also the bottom of our momentum pool today. And so this alpha momentum pool is really, it's really dictating which direction that we're likely to check out first. Are we going to grab this liquidity down here, or are we going to, go for some of this liquidity, up here maybe, right? Like we could go all the way up here, and we're still not macro bullish, right? We could go all the way in this area. It just we could still come slamming back down. But we can also slam back down, and we're not going to break anything until we get to under 15,970. Then I'm going to be solidly bearish and think we're probably going to continue down and recheck the bottom of our range. And if we break under 15,425, then I would suggest that we're probably going to play out that bearish pennant where maybe 14,000 is a level that we're going to check out pretty soon. But yeah, guys, I like starting the day above the momentum pool, and I think this episode is probably longer than it needs to be. Let's see, is there anything else that we should check out? Yeah, let's go ahead and check out the volatility. And we can see the 4 hour, oh, it has contracted all the way back down. It's just making a little bit of a, bottom formation. So it looks like the 4 hour is almost done contracting. That does suggest that there could be an explosive move on the 4 hour coming up. That's probably going to be the move, in the next 1 or 2 days. You don't know, you never know how long these things are going to take. Maybe another day. That's probably going to be the explosive volatility that's going to take us up or take us down in a significant way. But the 4 hour isn't usually the biggest moves in the world, but they are nice and juicy plays. So you're going to want to pay attention to that alpha momentum scale, all those numbers that I gave you, because they're going to play well with this volatility move. And again, the 4 hour hasn't flipped yet, so it could take another day. We can check up on that later. Let's look at the daily. The daily is almost done contracting as well. So that kind of sideways action on the chart. The daily is agreeing with the 4 hour, and that's pretty cool because that does suggest that it could be a bigger move than we expected. So, once this thing starts flashing sort of like this, and this one looks like it could take several days, it could take a few days to get to where it needs to go, but it's going to be a lot slower than the 4 hour. So the 4 hour might pop us up and then start contracting again, and then the daily might be ready, maybe next week. And let's go ahead and check out the 2 day. The 2 day is going to go in a contraction phase, which suggests that the daily move is going to be part of the contraction of the 2 day. So we're starting to basically see the 2 day and the 1 day, their directions might be in conflict with each other. Now, that's not guaranteed, but it just usually when I see those things, you know, set up like this, it's usually a contradiction where you get a little bit of whipsaw on the chart. Let's check out the 5 day. And the 5 day is actually expanding, so that's interesting. I'm going to have to watch this one a little bit more. But, hmm, what's with the weekly? Weekly is still threatening to expand. So some interesting things brewing up on the Bitcoin chart. But let's just contend with that 4 hour volatility first, and then we can understand that could be a fake out move. Even the daily could be a fake out move. Even the 2 day could be a fake out move. But the 5 day and the weekly are kind of brewing something up, and that stuff can take time. It can take weeks to play out. So some interesting things may be coming out on the chart. And again, for today, I am biased to the upside. And if we violate 16,510, then I'll kind of lose that perspective. But for now, looks good. And the 2 to 5 day projection, we are going to maintain bullishness as long as we are above 16,590 for the 2 day. So we are solidly in good shape for the 2 day in terms of perhaps what was that? The 2 day was a contraction, right? So yeah, the 2 day might have a contraction. So that does suggest that the 2 day might contract to the upside. I don't like that because that would suggest that maybe the 5 day and the weekly might still want to play out a move to the downside. But this is kind of like 3D chess. There's just too many volatility plays out here, and you can drive yourself crazy with that because volatility is direction neutral. So that's just really an attempt at projecting some concepts here using all of these different things, using price action, trend, momentum, volatility. Using all of those things together. And and then I think that we're still going to maintain some momentum to the upside above 15,760, at least on the 5 day. So that's really going to be a key level for us not to violate. in the next several days, 15,760, basically taking out this low. Like we can come all the way down, grab all of this liquidity, even wick below my solid bearish. But if we just flash wick back above the solid bearish area, like the 5 days still going to have momentum to the to the upside. So that's really kind of the critical level on this 2 to 5 day projection, where I start to think that okay, maybe this oh no anyway kind of just the bear pennant might start to play out. And so if you want to front run that, that's the number to consider there. Let's see, what else could we do? Let's throw on some EMAs. Let's see. Oh, I did want to just to point out this little triangle here that some of you might not have noticed. So for just some of the beginners there, just wanted to point out that we did have this accumulation wedge, and that accumulation wedge is how you could have perhaps, even. Well, I mean, you guys probably didn't have your own system for what I make for momentum, but because I kind of just provide that on a daily basis. But if you had some type of strategy that you were looking at, you could have said, "Oh, hey, there's this kind of accumulation wedge here." And depending on if you have your own strategy for momentum or whatnot, you could have thought that, okay, well, that's right along the lines of, a momentum threshold. And so that was likely to see a pop up. And you can see we're getting a little bit of a pullback just to like grab that first candle. And this thing could potentially continue on its way. However, these things do have a measured move of their own. And you can see, boom, like that measured move played out. So this little structure that I drew out, it also came true. So a lot of formations on Bitcoin these days just coming true, which is why I think that we should really pay attention to that bear pennant. That's the biggest danger that we have on the macro. And then because that could take us all the way down to 10,000 to 14,000. But then we also have those smaller patterns which could take us down to this kind of $16,000 area. It could take us up to the 17,000. It could take us up to 18,000. And so we have still some patterns to play around with, in this range before the 5 day to the weekly ends up putting in whatever move it's going to play in, whether it's going to be that last big move to the downside before some turnaround, or whether it's going to just shock everyone and melt faces and just skyrocket to the upside. I have no idea what would be the catalyst for that, but there could be one. I don't know, right? And so, yeah, guys, yeah, that's pretty much your formations for you. But the formations have been really good for us. They've been very, very playable. If I do put on my EMAs, guys, you may have noticed that I just accumulate EMAs. I just love looking at all the EMAs that I can look at. I keep updating these all of the time. You can see only the checkmarked ones are active on this one. And then same with this, only the checkmark ones are active on this one. So even though I wrote these all out, only the ones with the check marks are shown. But I'm trying to have as many as I can just because I do like to watch the interplay of them. I do have a strategy called the Alpha 9 Knockout. It's where the 9 EMAs, or the 9 and the 10 SMA basically cross over each other. And usually we have like a big pullback around those areas. And it's just, whenever we have the SMA and the EMA crossover of basically the same length, there tends to be a pullback on the chart. And so I just love watching for those because it's just a beautiful heads up. And so if you want to, practice with that stuff, feel free to copy my EMAs. Otherwise, I think that again for the people who are just new, I think the 9, the 21, the 50, the 89 and the 200, that would suffice you totally. Okay, like you don't need anything more than that. Okay, just the 10, you can just call the 10, the 20, the 50, the 89 and the 200, and you're set. Okay, all of these other EMAs that I'm using, they're literally just for theory and to try to predict things for the conversations that I have while making videos. It's not actually helping me with trading necessarily, except through the detail that I go through. But when you're trading, you just really want to see when your favorite EMAs are crossing over each other, okay? You don't need 100 million of them the way that I do, just for my concepts. And yeah, but let's go ahead and take a look at what the EMAs are doing right now. So let's see, on the hourly, you can see that we are quite bullishly above the 4 EMA as well as the the 9 EMA. So this is looking quite bullish right here. We're above the 200, the orange one, on the hourly as well. So the hour is looking okay. We do have this resistance. This is a 300 EMA resistance right here, which has smacked us down, smacked us down. We might get rejected again. But if we do break through that, it's probably going to be a nice pop to that $17,000 region, I just would suspect. Let's go ahead and take a look at the 4 hour. The 4 hour is something very similar. So you can see where we had this a pullback on the, just this kind of quick pullback here on this accumulation wedge that I had marked out earlier. That was basically us getting rejected by the 89 SMA. And the 89 and the 100, they're pretty much used interchangeably. They're pretty much the same length, okay? So uh, let's see, am I using the 89 right now, or am I using the 100? Yeah, so I'm using the 100 for the SMA, and I'm using the 89 for the EMA. So we did get rejected on the 100 SMA, and then now we've basically broken free of it. And so this is suggesting that we could potentially pop up here to that $17,000 region where the 89 EMA might just, offer a little bit of a block, you know, the way that these things can sometimes block you. And you sometimes poke above it, but you end up coming back anyway, just to do a check back. And if we do get above that, then you can see that the next one is up here around that kind of $18,000 area, right? Let's go ahead and go over to the daily so you can see what we're looking at. And here you can see that we do have a pretty interesting setup on the daily in terms of our EMAs. We are getting into this kind of daily squeeze. Again, like I have a million EMAs up here, but I love them because they can show me the dance that's happening with all these different levels. And you can see that the 20 simple moving average is coming down overhead. It's just coming way down on us really too fast, and that has a chance of actually breaking us down. That could be the thing that pushes us down to $16,000 if we get rejected off of that 20 EMA there. So I would suggest that, yeah, we could make it up to that like 16,800-ish area, but that kind of 17,000, 16,800-ish area. But this thing could easily just pop us back down. So just to be careful. But if we do have a check back from that and we do hold our kind of area down here, this kind of support area, then there's a good chance that we get a pop up all the way up to that 17,000 kind of 200-ish area where the 21 EMA is. And so just on an EMA basis, like this is looking pretty interesting, like as long as we don't violate 16,450, then our daily EMAs are going to be looking pretty good, right? Like I like this setup. This could easily squeeze us to the upside, assuming that this starts to flatten out and assuming that this 20 SMA just kind of chills out and kind of pops up a bit. It's coming down way too hard. That does suggest a little bit more work may be needed to be done. It could suggest that we go down and dip a bit and then work it out. So not sure how fast all of this is going to work out. A lot of these EMAs are very negative looking, and you just want to kind of see them soften a bit. Because see, once they start softening out, then you can get a nice pop-up, right? Now, sometimes we do have this kind of, just V-shaped I call this a V-shaped recovery here because we had a little bit of a catastrophic dump. I don't know what caused that dump right there. We had a little bit of a catastrophic dump, and then we just had a V-shape pop up. But right now, we're just kind of going sideways, so there's nothing that's really going to give us that energy. We either need to be smashed down so that we can get a V-shape pop up when the buyers step in, or we just need to go sideways for a while and let these things soften up a bit, and then we can pop up, right? If we're gonna pop up, if there is any strength to be had in the market. And then let's go ahead and take a look at our 5-day. You can see here's where the things start looking a bit different. The 5-day looking pretty bearish, right? We're underneath the 4, both the simple and the EMA there. We're way underneath the 9, but that does suggest that we could pop up and check back to the 9, which is that $18,000 area. So that does give me hope also. And this big kind of naked candle up here is, pretty exposed. It hasn't been retested. And so, yeah, I mean, we could test all the way to the middle of that. And if we don't really recover over the middle of it, then I don't think that we're going to continue to go, right? Because, if you can recover half a candle, you can usually recover the rest of it. But, we could we could easily grab a fourth of this, half of this, and then just get rejected back down, right? So that makes sense that this uber bullishness is over here, and then the weekly probably just looks very similar, right? Yeah. For the weekly, if we do get above my uber bullish level, then we're going to have a chance to have some type of bullish squeeze on the weekly. So really that 18,000, 19,000, $20,000 level, that's really what your target is. If you think this market is going to turn around, then you're probably waiting for us to get back above 20,000. And you can see we have the 300 EMA over here around 20,700-ish. And so that would be a nice one to get above as well. We're underneath the 300 simple moving average. Very bearish. We want to get above this one. And even to be honest, like we want to be squeezing between this 21 weekly and the 200 EMA. So again, like over 20,000, like between 20 to 25,000, and then starting to put in an accumulation pattern. Oh boy, that would be super, super, super bullish. I mean, that would be an amazing, a squeeze through the 200 EMA can just be magnificent. So we have a lot of work to do because that is the weekly. And then if we go over to the monthly, you can see that we could check back as high as 25,000 and still get rejected, and we would still be just in a macro downtrend. Okay, like just checking back to the 9s on whatever time frame you're looking at, that's just a normal thing. So like what we were just talking about, the weekly, like we really do need to have that accumulation pattern, all the way up to 25,000, and just, higher highs. And it doesn't, I mean, higher lows. It doesn't matter if we put in higher highs or not. The highs can just be flat, but as long as we're, as long as we're making higher lows, then there's a chance for like just some type of skyrocket at some point. Okay, it's kind of like you're coiling up, and then the snake just strikes, right? So, all right, guys, I'm gonna wrap it up there. Again, it's just kind of a Thanksgiving kind of weekend here. I'm totally stuffed on turkey and a pumpkin pie. So sorry if this episode just meandered a bit, but I did want to cover just a bunch of topics that maybe a few of you would have been thinking about. Did want to go over the EMAs, the price action, both our recent past as well as what we're looking forward to. I know that helps educate a lot of new viewers who aren't familiar with patterns, so I do try to go over those just to help you guys out. We should be learning during the bear market. And then, of course, momentum and volatility, which are kind of more advanced things, and it would probably take a personal study to really master that, as well as it could just take like 6 months to a year before it even starts to click. That's why I make these outlines for you guys, because I know a lot of people just aren't there yet. And since I am, that's what I'm trying to add to the community. If you guys would like to add anything to the community, please see the link in the description of this video for the the Discord, for the group where we all just like chat together, and it's super casual. This is the bear market, no pressure, but it is nice to see a couple voices chiming in almost every single day, and we get shared some really important and just cool information. So, all right, guys, that's what I have for you today. Stay safe and happy trading.